Hello, everybody out there. This is Dirk from the PrimeXBT Trading Academy with a very special new episode of That Crypto Show. Very special because today I have an interview guest with me, a fellow trader, David Lowe. David, welcome to That Crypto Show. Great that you found the time to talk to us today.
Hello, Dirk. It's good to see you again. Thanks for having me.
Good to see you again too. David and I we met at the Crypto Dubai Expo, and we kind of clicked because we are both into a certain style of trading. So we are both option traders as well. That's why, I thought it's a good idea to present you viewers out there as many different trading styles as possible. Option trading being one of them. I'm super excited to hear what you have to tell us about your trading philosophy, about your trading style, about what you think about the current markets. But before we start, I want to quickly introduce you properly to our audience. So David Lowe, David is the CEO of a company called Bromogroup, which is a Dubai-based investment company, and they specialize in proprietary trading in options and stocks. So you guys are basically a hedge fund, right?
Well, in a sense, but of course, we don't have external investors as of now. But yes, essentially, yes.
Cool. So this is also a first for us to kind of have a hedge fund manager here with us. Nice. And before David started as the CEO of Bromogroup, actually he was active in real estate development and asset management in Indonesia. Before that, I think it was real estate consulting in London. You also went to Cambridge and King's College. So really, I mean, you've put together quite a CV there in short time, I must say.
Yeah. Yeah, I mean, I was very fortunate to have had those experiences studying in the UK. I think it was a big part of my entire journey to where I am now. Of course, I studied quite different majors. I did business management at King's College, and then of course, real estate finance. The goal of all of that was really to enter real estate, which I did afterwards, getting into real estate consulting in the UK initially. And then I started doing real estate development back in Indonesia, which is where I'm from. So I focused mostly on residential real estate development, high-rise apartments, and also housing complexes. And the model would be kind of built to sell. So it's a very kind of fast-paced environment, very, very different to trading, markets, options, and all of that. But I think that the experience in general, understanding business, I think is invaluable, to understanding even public companies, kind of how they operate, and also what makes their value change.
Yeah, absolutely. I couldn't agree more on that. So now you said, it couldn't be, when it comes to the type of investment, of course, more different from what you're doing now. How was that transition for you? How did you actually get into trading, and maybe specifically trading stocks and options? I mean, this is like a highly specialized field as well, no?
Yeah, no, exactly. I think it started when I was in King's College. So during my undergrad, I was always curious about trading. And I think being in London, it's such a financial, hub and finance city that you get you brush shoulders with a lot of people in finance. So I remember in my first year, it was really my first encounter with this entire little industry. And I actually took courses outside of university in the city of London in Canary Wharf with other professional traders. Their strategy was kind of more, again, proprietary trading as well, doing more day trading with leverage on the FTSE, sometimes currencies. And so it was really the first time that I had more formal training by professionals and kind of teaching me how to do, basic technical analysis as well as fundamental analysis, understanding kind of, because it was day trading, really understanding the signals in the news, in the kind of the beginning of the day, and kind of what that meant potentially to price action and market movement during the day. But really, in those initial days, of course, I was still a student and I was busy, and I didn't tell myself I want to do trading full time like I'm doing now. So I didn't pursue it full time, right? So there were many years that it was kind of in the back burner. I was doing internships and work experience in other industries like private equity, real estate, consulting, things like that. And then when I graduated, I started working again in a very different industry. but I always kind of continued to keep up with it, more so on a personal level. I think I remember in 2017, I signed up to one of those trading platforms, and just started with very small sums of money. Started trading and investing initially in like stocks, did a bit of Bitcoin, other cryptos as well. But again, it wasn't anything professional like now. It was really only a few years ago, I think during COVID, when I started to diversify away from real estate, back in Indonesia as well, and started committing to this more full-time, getting more education, learning about options as well, which was actually very new to me, in general, the whole options world. And I think just slowly building the portfolio, investing more into it, and taking it more seriously. Yeah.
Wow, I mean, it's like probably I think a lot of people out there can find themselves kind of in your story again. When you see, you don't really hear often, from successful traders like, I was actually, educating myself. Like I was asking for other people out there that are already successful to coach me. Usually you always have those stories like, oh, I found everything out for myself. And I think this couldn't be farther from the truth. And so it kind of your story kind of copies my story. Like my beginnings also, I try to learn as much as possible from other traders. When there are strategies, you can adapt because they kind of fit your own risk reward profile and your kind of own style. Other strategies, even though they are successful, you cannot adapt because they don't make sense to your individual trading brain. So that's kind of interesting for me to hear. But still, I mean, going then from a hobby trader or like the typical retail trader, even if you are successful already then and earning money, to a more professional level, this is still a kind of new leap in my opinion. So how did this happen to you? How did you say, like, for example, one day, you know what, I want to do this professional now, I'm going to found my own prop trading company for this?
Yeah. Yeah, I think the evolution for me really was with my option strategy, right? Because I think you can really only commit to something more professional and live by it full time if you know that you can sustain yourself from it, right? And it can replace like your income from a job, from other sources of income. And so I think when I did the maths, and through the past few years of trading this new strategy, which for me is still very, a few years of one strategy is not a long time if you consider, the entire history of this industry. So, but I think, especially this year alone, considering the volatility that we've seen, it has kind of gone to show, at least in my opinion, the resilience of what I'm doing and the potential really for long-term sustainability in the approach and the strategy. And that just gives me more confidence that I can commit myself to this and I can commit more capital. Because I think what a lot of people probably have trouble or are hesitating with is really going all in, or at least committing a good percentage of their net worth in kind of investing in this, whether it's their own business or another startup. So it really is that, yeah.
Yeah, I think that is really interesting. And from my experience too, this is like the final step you have to overcome to kind of believe in yourself, believe first of all in yourself, that you are on a mental labor steady to really trade your strategy and not change your strategy all the time just because you have a number of losing trades in a row, which will happen, of course. It's part of a game, And second of all, to really commit also financially to that. We see a lot of, in my opinion, at least a lot of new traders, retail traders, even ones that are successful, that in my opinion, have everything that it needs to take this to a professional level, still hesitating because they are unwilling to really put their money where their mouth is, if I can say it in a sloppy way like this. And this is what you eventually have to do, because I think they're still maybe fueled by social media, a lot of the expectation out there, if I invest like $100 in some kind of, pardon my English, shitcoin or something like this, I'm going to become a millionaire. Or if I follow this trader, I'm going to have hundreds of % of performance every month. And it couldn't be farther from the truth. So,
Yeah.
ladies and gentlemen, this is the living example that you can do this transition actually in a rather short time, I must say. You know, it didn't take you that long, really. So, of course, the obvious question now probably is here, and of course, I'm going to leave it up to you how much you want to share there. And can you maybe describe on a higher level, like your investment strategy? How do you approach trading and position picking, maybe?
So definitely, you mentioned earlier, it has been quite a short time. And again, I say, in the beginning, I did try out many different strategies that probably a lot of people start with, day trading, short-term trading, position trading, and then of course your kind of long-term holdings as well. What I've gotten to be comfortable with, and I think this is for me, that I think suit my personality as well, is again options trading, and within that, it's mostly focusing on out of the money option writing. So there are a few different specific strategies that I use, namely bull put strategies, also selling puts sometimes, as well as ratio spreads as well. Sometimes I sell calls. And I think what is very important is to understand what your underlying is, right? Because you can do this on almost any stock, any index. For me, what works so far is doing it on the S&P index futures, actually. So on the ES. And what that entails is you have a lot of liquidity. The underlying is the S&P 500, which is one of the most liquid indexes out there. And there's also a lot of news and a lot of fundamentals. It also lives by, for the technical analysts out there, I think it lives by the price action a little bit more. You can rely on the technical indicators to kind of give you an understanding of where it's going, if it's bullish, if it's bearish. By using this added strategy where you're option writing and you're receiving credit, net credit, you don't have to really, bet as to whether it's going up today or tomorrow, but you kind of just have to at least take a bet as to where the prices are not going to go. In terms of kind of time frame, I like to write options from anywhere, usually from shortest 1 month. And it can go as long as even 4 months. So it really depends on the market, on the volatility. It also depends on the trades that I currently have in my book right now. I think there are still many ways that you can diversify and you can kind of risk manage as well, to ensure that you have a good kind of book and expiring in the next week, in the next month, in the short term and kind of medium term, going up to that 4 months. Within the time frame of kind of 1 to 4 months, I think that the advantage of this, of course, is that time decay, that theta decay, and you really want to capture where that theta decay is kind of strongest. And I think usually during like the 90 days, kind of like the 3 months is when that curve really turns, more steeply to your advantage. And of course, you can also do shorter ones like 1 month, where also the time decay is still very strong as well. Yeah.
A lot of information here. Maybe, we should break it down a little bit for our audience, because I'm sure a lot of people not so much into option trading. So basically, to summarize, is what David is doing there. He's short selling options mainly. That means like he's selling the rights to buy or buy an asset from him, or sell an asset to him. For example, the S&P 500 to another person. So he's acting kind of like an insurance company. And because he's doing that, he's getting an insurance premium. This is the option premium. This option premium is always depending on a couple of factors. The most important are where's the price currently of the underlying, where's the so-called strike price of the option. So that means for what price can the option be executed, and where's currently the volatility of that asset price. Especially when, like David, you like to sell, to write options out of the money, meaning like the asset price is not that year, where not yet there, this way around, where where the option makes sense to be executed, you have to manage kind of the theoretical value of the option. And the special thing is this theoretical value of options that are so-called out of the money goes very, very fast and steep to zero, especially in the last 3 to 4 months. This is why David is specializing on this. So David is kind of actually managing volatility. One of your probably daily job is really to have an opinion on, you know, how is volatility going to develop on the market right now, and what do I need to do kind of to hedge my position. And for me also, this is the beauty of trading options. Now you do it on stocks and indices more. I do it on Forex options, or on Forex pairs more, especially euro dollar, is that you kind of can have a longer term opinion. And even if you are short, if you are wrong, like for a couple of days or maybe a couple of weeks, where the direction of this trade is going to develop, you still can earn money because you are able to hedge your position. It gets problematic if you hedge more, if you pay later on more for the hedge than what your premium was. But, you know, that is part of a game. Of course, you cannot win every trade. Very complex, but also very rewarding. And, you know, I'm very happy to find somebody, you know, who's as passionate about this as I am. Let's go, however, maybe back a little bit again to a more macroeconomic view. We talked earlier already about, you know, what are the challenges for new traders to transition to a more professional level. And as you said, it's like putting your money where your mouth is, and especially believing in you, having a strategy, not changing your strategy all the time. However,
Can I add something to that as well?
Yeah, sure, please.
Yeah, I mean, I think, again, going back to what we were talking about in the very beginning, educating yourself is very important. You know, I can't stress enough. And no matter how experienced you are, you know, there are many forms of kind of educating yourself, right? So I think having access to information, and information that is relevant, because, you know, with kind of media and the news, you know, you're getting pinged messages almost every second these days. But really understanding what information is useful to you and your trading strategy, and what you should be listening to, and, you know, which ones you should be ignoring, I think is more important than anything these days.
Yes.
But having, you know, potential mentors, or, you know, actual people who are actually executing the strategies or similar strategies that you're doing, I think is very important, especially in the early days. And I know that's, you know, I attribute a lot of my success to that as well. The initial mentors who introduced me to kind of similar strategies. And of course, I tweaked it a little bit, you know, to kind of suit my own kind of tolerance, risk level, capital availability, and all that kind of stuff. But yeah, I can't stress enough, you know, continual education and staying up to date. Yeah.
Yeah, that's well, thank you for saying that, because you know, even after 25 years, I'm still like learning new things every day. I guess your brain becomes less flexible over time. At least that's my experience, you know, as you get older. But still, you know, it's always a game of I have a hypothesis, and I'm going to follow this hypothesis. But I also need to be aware that I can be wrong, and I need to accept that I'm wrong. I think that's a big part of the puzzle as well, because we human beings, we don't like to be wrong, you know. That's why we throw good money after bad money so often, especially in our beginning trades.
Yeah, and it's still a problem for me. I mean, you know,
it never
losing
ends.
is I mean, losing is never easy, losing a trade. And I think sometimes maybe even for beginning traders, you know, it's easy to lose sight of the longer picture here, you know, like if this is a career, this is a business, you got to think of the long term. Your goal is, you know, not to win every battle, but to win the war, right? And I think even if you have one bad month, maybe even one bad year, I think that's okay. And I think also the perception of what is bad, you know, you always kind of have to compare it again to your underlying or your market. So for me, of course, it's the S&P 500, and this is also really the benchmark that a lot of, you know, other professional, whether you're fund managers or hedge fund managers, you're always comparing your own performance. So, you know, even Warren Buffett, you know, he has years where he's losing, you know, percentage losses, but then maybe compared to the market, it's still better.
Yeah, absolutely. I mean, and what are we talking about here? historically over a time span of maybe 40 or 50 years in the S&P 500, what is it, like between 6 and 8% on average? I'm not sure right now. Yeah. So this is what you're comparing yourself against. So take this as a, as a reality check, really, if you're thinking like, oh, I need to make like 30 or 200 or 1,000% a month in trading. There are no professional long-term traders out there that do that, because I mean, what would that entail? That you probably own the whole world at one point. I'm exaggerating now, of course, a little bit, but as a professional trader, if you make on average your 1 to 3% per month, this is already going to put you really in the, probably not more than the top 10%, probably in the top 1% already out there, if you make that on an average every year. So be realistic, and of course you also need to be realistic when it comes to capital preparation. Can you do this with €1,000 or $1,000? Probably no. But what you can do is you can build up a track record with this, and then you can maybe find somebody who's willing to invest in you once you have shown this, that you are able to do this through different market phases out there. So realistic goals, it's a long-term game, really. Nobody falls from the sky and is already the master of trading.
Time is your biggest advantage.
So somebody like Napoleon Bonaparte had to learn despite being talented, also how to do warfare, probably.
That's right.
Now, if we paint a maybe larger economic picture out there, what do you think like the biggest challenges for the next 3 to 5 years are there? Because obviously, I think we are in a economic situation that is very, very special, and that probably a lot of viewers, actually myself included, I must say, haven't experienced yet. High inflation, war and potential war going on within the world, broken down logistic lines, and basically uncertainty in where everything is going to go. What's your opinion? What's your expectation for the next years?
Yeah, no, totally. I think definitely in the shorter term, inflation is by far, definitely catching the headlines, and is what, the Fed is looking at, and a lot of like economists, especially in the US, because that's kind of the market that I'm focusing on. And, inflation isn't just a single country problem. It's not just in the US. Of course, right now we have a global inflation problem. It is not a new issue. So, we have seen already the decline of, more than 20% in the S&P, and, even worse for the NASDAQ. So it's not an issue that isn't going to catch people, I think, off guard, unless, of course, the inflation numbers continue to get worse. I am reading, though, that supply chain issues are loosening up a little bit. So, I am more bullish in the kind of near to longer term when it comes to inflation settling down. We are still seeing core inflation being higher than, definitely higher than predicted. So we still have a bit more to go. But I think also it depends as well on how the Fed responds, right? Whether they're, really going to crash the market into a hard landing, or really try to do as much as they can to, avoid the economy from hard landing. And as we know, in the previous few weeks, we've seen a lot of volatility around what they're saying as well. So I think we have to, as market participants, keep an eye on, of course, inflation numbers, on the Fed. For me, though, I'm more worried longer term, actually, with regards to war, with kind of what you're saying. And again, I think for a lot of us, this is very unprecedented with what we're seeing now. The Russia war, of course, Russian and Ukraine war, which is already taking place. I think that the negative impact of that is more on the inflation. It's definitely very, very bad. But I think that Russia as a trading partner to the rest of the world and to the US is, not as significant when you compare it to something like China, which I think I'm a lot more worried for when it comes to economic impact and potential economic damage. We're seeing now more deglobalization and economic decoupling between China and the US, and potentially even other Western developed countries. It's still very early days, I think, especially with Xi, getting his new term with his new kind of Politburo. We're still in the very early days as to understanding what that really means We're already seeing the damage, or at least the disruption in certain industries like the chip industry, and that's also thanks to Biden's new regulations as well. So I think in general, the market and businesses just don't like uncertainty and changes, whether it's potentially good or bad in the long run, and it's just added volatility that we as market participants have to take into account and potentially reserve added excess liquidity for.
Yeah, but it's interesting, like if what you say, of course, looking a little bit outside of wars or potential wars, this is always, kind of a black swan event that you maybe expect, but cannot really expect. You never know what is going on there really behind the curtains on a more higher geopolitical level, of course. But I tend to agree with you very much about the dangers of inflation. And we've seen really, in my opinion, the past, especially 3 months, that when it comes to economic data, the market is really just reacting to what is the Fed saying about interest rates, especially are they going to raise still as aggressively in 2023? And what is the current CPI number, and is it lower or higher than expected? We saw that, I think, especially now in October again. And like, for example, I would expect as a German, when the CPI data for Germany came out last, it was far worse than expected with 10.4%. Nobody really cared about it on the market. It was like, what is going on here? I've never seen something like this in my 25 years. But this is also on the institutional levels, the guys with the really, really big pockets out there. I'm talking about pension funds. I'm talking about really hedge funds, mutual funds that have been along for decades already, that manage billions and billions and hundreds of billions of US dollars, how they position themselves. And they are only eyeing at that at the moment. So for me, but I really tend to agree with you. I actually personally thought inflation would come down far lower already in August. So I was kind of like betting on that. And still, I think, the prices are going to catch up eventually to the higher level we've established now. So inflation is going to come down. I think last Friday we heard already also that the Fed said, okay, this time maybe we're going to do another 75 basis points. But we're going to maybe keep it slower after this at 25 basis points. And the market went ballistic, which was a shame because I was short euro dollar at that point because I speculated on a bet ending Friday evening. But that's the way it is sometimes.
Yeah, it was a very surprising Friday.
We've been, I don't want to, borrow too much of your time. Maybe because I know we have a lot of people out there, of course, trading cryptocurrencies that are invested in Bitcoin. How, as a option and stock trader, is your view on the whole, crypto sphere on Bitcoin? What do you like about it? What don't you like about it?
No, that's a very good question. And I think for me personally, I'm more of a traditional trader and investor, I think. So for me, crypto, is a very new world, even though it's not very new anymore, I think. But definitely with kind of Bitcoin, as I mentioned earlier, I did dabble a little bit in it back in 2017. And I think at that time, the price was like $1,000 or something. So, like if only I held until today. But, is Bitcoin going to go anywhere in terms of as an asset class? I think it has established itself, especially in kind of the last few years. More and more institutions are kind of diversifying, at least, getting in. You have as well the adoption of Bitcoin and cryptocurrency in general amongst businesses. I think there's a good adoption rate there. So as an asset class, is it really going to go anywhere? No, I definitely don't think so. If you look at just economics in general, supply and demand, as far as I know, the supply of Bitcoin, don't know about other cryptos, but Bitcoin for sure is a fixed already. So I mean, if you just look at simple supply and demand, that should mean that as long as demand is there will continue to be a price, and there will continue to be volatility and liquidity as well. I think though it's just a matter of the volatility as another asset class in general. It is not a company, so you can't really understand earnings or fundamentals, but it doesn't mean that there are no outside influences and external forces that are potentially influencing the price action of Bitcoin. So I think you mentioned last time that the US dollar was actually a big proponent as to the impact of Bitcoin. So, it is still, I think, a very powerful asset class that even long term considering prices have fallen quite a bit, I would be open to diversifying myself, but probably more for long-term holding, because I can't do my option strategy on Bitcoin or other cryptos. So I don't think it will fit my kind of short-term and day-to-day options and kind of trading business. But longer-term holding, yeah, I mean, I definitely would be open if I think the price is quite good. Yeah, technically, of course. Yeah.
Spoken like a true option trader, I must say, really. Always juggling the risk reward of everything. David, thank you so much for being with us today. I really, truly enjoyed having you here and hearing your thoughts about the markets. And you guys out there, I hope you enjoyed it as well. Getting a point of view from somebody who is doing full-time prop trading, what probably a lot of you are aiming to do out there as well, who runs his own, as he says, small hedge fund. And yeah, David, really, thank you so much. Appreciated your insights into the market very well, and hope to see you one day again on our show if you want.
Yes, I hope so too. Thank you so much, Dirk. Thanks for having me on.